Would you remortgage your Lincoln home to help your child onto the property ladder? How far would you go to help your child get on in the world? Many Lincoln parents move area to ensure their child gets into the best primary school, or to fund their university costs. Many of you listening to this have even helped your children with the deposit for their first home from savings. However, I have come across many Lincoln people in their 50s and 60s, who have good jobs and incomes, yet don't have the savings to give to their children to help them buy their first home. It doesn't help when you consider the average value of a Lincoln home has risen by 16% in the last 5 years, from £192,650 to £223,450. I am therefore seeing increasing numbers of parents who are willing to remortgage their own Lincoln home or start a new mortgage, if they own their Lincoln home outright, to get their children onto the Lincoln property ladder. So, whilst the government is trying to turn Britain's 20 and 30-somethings from generation rent into generation buy, the bank of mum and dad are mortgaging their retirement to pay for it all. Yet it need not be cost-prohibitive borrowing the deposit, as you still have access to interest-only mortgages. With an interest-only mortgage, your monthly mortgage payment covers only the interest on your mortgage, not any of the original capital borrowed. This means your mortgage payments will be lower than on a repayment mortgage, remembering though at the end of the term you will still owe the original amount you borrowed from the mortgage provider. 1 in 14 new mortgages are interest-only and 1 in 5.5 existing mortgages are interest-only mortgages. They are extremely popular. Anyway, many Lincoln homeowners might be worried about having that level of debt in their golden years. However, many plan to pay off the mortgage when they downsize as they get into their 60s and 70s. I talk to many Lincoln homeowners, who are asset-rich but cash-poor, and desire to help their children onto the Lincoln property ladder. Their attitude is their children will inherit their property when they pass away, so it seems practical to give them that money to work harder for them earlier in their life when they need it to buy their first home. Can you get a mortgage, even if you are retired? A lot is dependent upon your age and financial position. The mortgage companies will see if you have adequate funds for your retirement and emergencies, plus leaving enough equity in the property to enable you to downsize in the future. Like all things, you need to take advice from a qualified mortgage arranger. So, that then begs the question, is there enough equity in Lincoln homes to borrow against? In the late 1980s and again in the early 2000s, many Brits saw their homes as a cash machine. Numerous homeowners remortgaging at the end of their mortgage's preliminary term, which was usually after the initial 2, 3 or 5 years, but when doing so increased their mortgage to enable them to buy a nice car or fancy holiday. Yet, by increasing the borrowing, it created negative equity in the early 1990s and stopped many homeowners moving home between 2009 and 2013 because of their lack of equity. Therefore, I must ask, have we borrowed too much this time round? Looking at Lincoln and the specific postcodes LN1 to LN6 combined. In 2016, the average Lincoln homeowner had a mortgage of £79,687 and today it is £92,343, a rise of £12,656. Looking at these numbers, one might think we are again overextending ourselves, yet as regular listeners and readers of my blog about the Lincoln property market will know, that I like to drill down and look at all the figures. Initially, I was worried about these statistics, until I considered the equity Lincoln people have amassed over the same 5 years. In 2016, the average equity held in a Lincoln homeowner's property, whilst they still had a mortgage, was £112,963, yet today that stands at £131,107, a rise of £18,144. Even though mortgages have increased, Lincoln homeowners' equity has risen even more, meaning as we stand today, mortgaged and owned outright properties, there is £16,670,851,431 of equity held in all Lincoln homes. Whilst the total value of mortgages has increased slightly since 2016, as a percentage, this has gone down, meaning Lincoln homeowners and Lincoln landlords have increased their equity in the last 5 years. It can quite clearly be seen that the financial insecurity sparked by the credit crunch crisis of 2008, 2009 has created a generation of Lincoln homeowners and landlords who are savers and improvers rather than movers and excessive borrowers, using excess cash to invest in their property and pay down debt or to excessively borrow on their equity growth. Only 16.35% of the total value of Lincoln property is borrowed money with a mortgage. This is great news for every Lincoln homeowner and Lincoln landlord because irrespective of whether the post-lockdown bounce is short or long-lived, it shows the Lincoln property market is in a better state to ride out any storm that it might encounter than ever before because less people will be in negative equity or have prohibitively high mortgages. Before I finish, I fully appreciate money and inheritance is a sensitive subject for many families. My message to all the Lincoln parents is, just because your children aren't talking about the subject, it doesn't mean it's not on their mind. The lead must come from you, as a Lincoln parent, to ensure the wealth held in your bricks and mortar can be used to your family's advantage, when they need it most. If you do, your children will thank you for it, and they may even do the same for their children, then, they may do the same for their children's children, creating a legacy that will go on for generations.